You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it is time once again for a little program we like to call around these parts Options Insider Radio, the program where we welcome on guests from throughout the world of options and derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the ever exciting, at least we hope so, Options Insider Radio Network. Reminding you out there listening to this show, any of the shows we do here on the network, usually a couple of shows hitting you a day here on the network. Make sure you keep those reviews coming on your platform of choice. We saw a massive influx, as you might imagine, over the year that was 2020. We want to keep that ball rolling, give all these new people who are discovering the world of options and the world of financial markets a place to turn in these troubled times. Keep those comments, keep those reviews coming wherever you get these shows. We do love to hear from you guys. Let's see who we're hearing from on the old program today. Joining me on the Options Insider Radio program, old friend of the network, even though he hasn't been on in, let's say, a few years. He is Mr. Paul Giganti, the managing director over there at IMC. Paul, welcome back to the Options Insider Radio Network. It has been too long, sir.
Thanks. I'm happy to be here. I was afraid you lost my number.
I think the last time you and I chatted was on a stage at a conference somewhere back in the dark mists and sands of history. Since it's been a little while, Paul, since you've joined us here on the network, we've obviously had a lot of newcomers joining us since that point. So why don't you go ahead and give our audience a quick overview of your background in the option space. I know you've worn a few hats over the years, as well as what the heck it is you do day to day over there at IMC, sir.
All right. So I'll give you a quick rundown. I was an independent market maker at the SIBO for 6 or 7 years, worked for Susquehanna for 17, left after I was running the office in Chicago for about 5. Found my way to NASDAQ, did a short consulting gig there. Went to TD Ameritrade and did their market structure and client advocacy there, and was recruited by IMC to run their new options retail execution venue in conjunction with Dash Technologies. So I gone from being a market maker and manager to helping run a options execution business for retail customers. So it's been really a fun way to go through this career, and and last year was the year of retail, and it appears that is continuing. So it's a very exciting spot to be in. People are starting to really see the advantages of trading options, and it's never been cheaper, better place to express your opinions in the marketplace. Just a real joy to be here now and doing business with really all of the major retail houses and executing orders for them.
What a year it was to be in charge of retail execution, Paul. Just talk about being in the catbird seat of the options market at an interesting time, sir.
It really was. I mean, it's just been amazing. And we've our offering has been going for about 4 years now, and it's been we've been growing consistently because we do a really nice job with the one thing that I can say to all retail customers is your orders are being scrutinized for execution quality by your retail house like you'd never believe. Every order is looked at through a microscope to make sure that we executed as best we could, and that the execution quality continues to be good on order by order and a day by day, month by month basis. We have to earn our spot. So it's been fun to watch us earn our spot against the big guys that are really, really good at this. And so now I can start putting us into the category of being pretty darn good at what we do. We're still chasing a couple of the big guys, but hopefully they're hearing some footsteps.
Going to get into all of that retail fun in a second because, like you said, it was kind of the tale of 2020 from an options perspective. Certainly the retail one lot, Robinhood, call them what you will, trader, now kind of the whale, the big dog out there in the option space. But before we get to that really quickly, Paul, I know you've spent a lot of time deep in the weeds, shall we say, of market structure over the years. You and I have been on one or two panels together over the years talking about some esoteric topics over the years. So I'm curious from your perspective, we had an interesting inflection point, and we had many interesting inflection points in 2020, but one that certainly comes to mind for me from the year that was options trading in 2020 was that period beyond March where all of a sudden that moment that we all dreaded really as floor-based market makers finally came to pass in 2020. We saw that moment where the entirety of the U.S. options market went electronic for the first time ever. Storied pits that were legacy pit products like SPX and Eurodollars, all electronic, everything in the country, electronic 100% for the first time. I'm curious for you, what were your thoughts, when you saw that was coming to fruition? Were you as terrified as I was that we were going to see some horrible things? And maybe the flip side of that, were you as surprised as I was that things not only held up, but put up record numbers in that time, Paul?
Well, the record, I'll go from the end to the beginning. The record numbers, shocking. Clearly, as is everything that's been going on since last February and March, you've never seen anything like it. Been in the options business for 35 years at every aspect, every part of this business, from exchanges to retail to, from trading companies to being an independent trader on the floor during the crash at 87, all those things. Nothing has touched this as being so bizarre. The idea of going fully electronic, strangely enough, for as much of a floor-based guy that I really am, it didn't surprise me that everything went really very smoothly. Now, I thought, the fact that we got 16 exchanges to go through this gauntlet and live through it, and with six floor-based models, something like that, that's a shock that we made that transition. The fact that it can handle it, not totally shocking. The fact that we lost, some momentum in some of the index products because, one, they weren't quite as sexy as the Teslas and Amazons of the world, but they were, so you would expect the SPX to probably not have quite the year that if you looked at 50 million contracts, you would assume that 12 of them were going to be in SPX, and they weren't. So those are the things that that's where, I was surprised about 1,000 things about this, but that was probably the most surprising is that the volumes went back to individual equities, which is my background. And so I'm thrilled when it goes that direction, thinking that, finally they're going to be loved again, because we don't have this correlation, 100 correlations constantly, where, everything just moves in tandem. Now we had everything like popcorn. They're all over the place.
Because individual equities, as long as they are either Tesla or Apple, right? That's pretty much the big dogs out there.
The top 25, I think the 50% point moved a lot. Like it had gone where 50% of the option volume was above or below the number. It got down to maybe the 12th issue in the last couple of years. And I think we've expanded well into the 20s, but a little bit outside of I haven't seen that exact number recently. So, but I know that we've been pushing that number back up higher, which is healthier for the industry. It's the greatest breadth of products that are being used. And, options do belong in everyone's portfolio as a tool. And the fact that so many users are using them and, presumably in an intelligent way, there's a bunch of education out there that every one of the houses has that is just, really amazing. Things that, education just like this show that you would never, you never would have had 10 years ago or more. And every year it gets better honed and better, easier to digest.
Well, we have good timing to have you on the show today because not only were you on the bleeding edge of all that retail execution explosion last year and continuing this year in 2020, but you're hot off the retail panel over there at the annual, now virtual, Securities Traders Association of Chicago. So they roped you into my old gig, Paul, of doing the options panel this year, particularly with their retail focus, which I think is pretty fascinating. So both from your perspective at IMC as well as from the panel you just got off of, what were some of the more compelling takeaways from a retail options perspective in 2020, sir?
Well, I had four of the most articulate people in the options industry that have just amazing backgrounds. So to me, it was fun to sit back and just listen to them because though we've all worked together, I think all of the four panelists on there, beyond myself, there's only one that I hadn't worked directly with in the last few years. Many of them I've been friends with for 25, 30 years. But what the real beauty is how they answered the question. They really put in perspective this like my favorite part of it was the gamification question that I threw out there, knowing that it's really a hot button word. People are talking about, the retail houses have made it almost a video game in order to trade. It's so much fun. And to boil down the collective response in the way I heard it was, there is nothing wrong with having a great product that's easy to use, that's not intimidating, that gets you able to manage your own financial future. Now, you can make stupid decisions. That's where it stops. My editorial portion is they're absolutely right. And just because you got an easy-to-use product means that now the onus is on you to make the right decisions with it and not be reckless. And the problem is, it depends how you believe people's, should be given. Like if you shouldn't give them a car that's going to be really high performance because they may overuse it or use it in a silly way. It seems like a bad reason to not give someone a high performance car that they really desire. And I kind of feel the same way about your financial future. You're given all these tools. You don't have to use them all. And just because it's easy, it made it really easy and brought it to a point where younger people who aren't, who tend to be more intimidated by their financial futures are able to get a toehold here. It makes me really, thrilled that, firms like Robinhood, once it started to push it, it was really started with the TD Ameritrades, in Schwab's way back when. And they turned this into, a really, exciting place to be again. And, the first iteration of it was fantastic that you could actually do it online a few decades ago. And now this iteration where it's understandable and packaged in a way that you don't have to be a math major to understand it. I just think it's exciting.
It is exciting. Of course, the old school cynic in me out there, and most options traders, I think, are diehard cynics, raises the question of, is it too easy now? Is it so easy? You can just go online, click a couple of the forums. You can get level 3 with pretty much not a lot of hassle out there. And of course, we all know level 3 opens up the gates, the keys to the kingdom. We saw some of the big horror stories last year. Of course, the Robinhood customer who took their own life on a pretty much an early exercise of a short put spread. If he understood a little bit more about how options work, he would have realized that it wasn't that big of a deal. So we saw a lot of those types of horror stories that are kind of the low-hanging fruit. Are you concerned, Paul, that maybe, like you said, giving people the keys to these sports cars before they're ready may perhaps be a bad thing in the long term, sir?
I would think that you will see some more structure from the retail firms, I would guess, over the next few years on really setting guidelines and, having a graduated driver's license to keep the analogy going. And which makes sense. You don't want them driving after dark. You don't want them driving with, a lot of distractions. Maybe a little more regulated idea of how to enter into options trading might be smart. I would think that there are always going to be horror stories, even with the graduated driver's licenses. You can only do so much. People are going to be silly themselves. The tragic Robinhood story, I think, is certainly a cautionary tale of what the worst of the worst can do. I think that a lot of people are looking at that as hey, we got to make sure that we're never going to put our people into that situation. And not to minimize it, but there's 13 million new customers, and one made this tragic error that presumably was preventable. I hope that the reaction from the industry isn't too over the top, but it also seems like people have taken kind of a measured approach at how we're going to handle this. With the new administration coming in about 24 hours, I think we will start to see if there's some sort of fallout when it comes to the literally the Robinhood story. It's been them the whole time. I really don't see anything they're doing wrong. I think that they're making finance accessible to a generation that wasn't largely apparently wasn't embracing the other sorts of technologies that weren't speaking to them.
We've upgraded so many other things out there. You mentioned the platforms are much better. They've been overhauled. The gamification, making it much more fun to interact and engage. The ease of use has certainly been overhauled dramatically. Maybe, do you think along those lines, what we were just talking about with the approval and certification, maybe is it time to take another look at the old stalwart, the old standby of the level 1, 2, and 3 type options trading? Maybe now that we're doing record volume, record new participants joining the market, is maybe that an antiquated concept? Do we maybe need to come up with something else that's more appropriate for the time, sir?
Someone that would be, yeah. I think that it's certainly worth exploring. Nothing wrong with it. People that are in this space every day that are a little closer to the customer probably have a better answer for that, and they probably see those holes in the people's knowledge or understanding of risk much, much better than I really could. I think that's the frontline people that JJ Kinahan, that really sit there and talk to the clients directly. Tom Sosnoff over at Taste, he does it all the time. Victor Jones over at Doe does it all the time. And these people are senior people that love to talk to clients and understand what's bothering them. And they do it out of I know those three are super successful because they do it because they love what they're doing. And that's, I look at their performance in their careers because of what they do. So they understand the client. The answer to what the answer is probably doesn't do it justice.
Well, what were some of the takeaways from the panel from an outlook perspective? Obviously, 2020, a historic year, unprecedented by just about any measure you could possibly throw at it. It seemed like it would be challenging for the industry to maintain those volume numbers. Maybe we don't want those volume numbers to continue. Look what it took in society to generate those numbers. Maybe a little bit of retreat wouldn't be the worst thing. But what was the consensus from the panel there? Are they seeing these new customers that came in mass in 2020? Are they sticking around? Are they starting to expand beyond just buying Tesla calls? What are they seeing? What are they expecting for the future from these clients?
Well, so the houses like, the TD guys and the more established ones thought that we would continue. And it's not that the other houses didn't get new clients last year either. They've expanded like crazy too. So it's not purely the Robinhood story. They just happen to be the front runner and that catches all the, arrows and darts and whatever you want to call the flack. But those guys still super bullish on the business, still think that last year's numbers are going to be eclipsed in 2021. And what makes me believe that from the pure retail, line item is that they have all grown in numbers in accounts so much, and they're still only scratching the surface when it comes to touching the client, touching all their clients to get to them to trade options. So the nones to ones, as Victor Jones said, are the ones that they're looking for, and they're getting them. And they're getting them because they're educating them. And that's so. The Robinhood guys said, we're just scratching the surface on our client base using options. And so that to me is just incredibly bullish. There's 13 million clients this year that Robinhood has that they say they're only scratching the surface. If they had the penetration that the TD Schwabs or the E-Trades had from their account holders to how many of them actually trade options, we would see another explosion in the options retail volumes this year.
I like it. It seems like most people have been a little bit dire that maybe we can't or perhaps shouldn't be able to reach those numbers again. But it sounds like, Paul, you're pretty bullish on volume for 2021, sir.
Well, I'm telling you what the panel said. and I actually completely agree with them. They believe and that as a group, it sounded like they believe that the dam had broken. Like, okay, we just broke down the wall to all these clients that were intimidated by options before, and we're going to see them start to dabble. And the beauty of it is most of the Robinhood people and, the Robinhood-alike people, the brand new traders, are doing the smartest thing that you could possibly do, is they're trading one lot and two lots. They're not trading 10s, 20s, 50s, and 100s. And that makes a huge difference for the safety of the product. If you have a bunch of random one lots, or even well thought out one lots, you're not going to hurt yourself that bad. And that's the kind of thing that people need to do is, if you're making these investments with an account that's got $25,000 on it, you should trade a very small size. And if you have an account with $250,000 and you're a brand new trader, you should trade really small size. And that's what the educators are doing out there. They're telling them to do that. And so I think that's great. The number of one lots in the average order size since the ticket charge went to zero with all the major brokerage houses, that has caused that the average order was somewhere over 10. I think it was about 12 or 13 before. Is Henry Schwartz's numbers from last week, and I think the average order size now is 7. And so we've just seen it collapse because people are tiptoeing into positions and tiptoeing into the options industry instead of taking these big splashy things. Hey, I have $250,000 in my account. I'm going to trade this big because I can afford it. Well, if you keep trading like that and you're a novice, you're probably not going to be able to afford it very long, or you're just going to get lucky and not realize you were lucky. And let's keep it smart and keep it safe.
One of the other big trends in the markets, of course, for 2020, and it's certainly on everyone's mind right now, is all things crypto. That's, of course, an area where the intersection of crypto trading, let alone crypto options trading, has always been a little bit nebulous here in the U.S. A lot of U.S. customers still don't really have access to those markets, let alone the options side of those markets. I'm curious if your panel touched on that at all, Paul, and maybe if they had any thoughts, or perhaps you yourself have any thoughts on the outlook for the intersection of crypto and options trading in 2021, sir.
I do not have any unique knowledge to it. The panel did not touch on it. would have been a good place to touch. I know that most of the major brokerage houses are starting to house crypto and get that, it's becoming part of their offering. As that happens, that will build out. I can't imagine we're going to see 2020, 2022 without some way to trade options on crypto. So I would imagine there will be and I have no unique knowledge. I would just imagine that someone will find a way to list a crypto ETF that will pass muster, and we will have options on it, and it will be very popular.
Let's hope. You're being very optimistic on here on the show. You get me excited for 2021. You just came off this panel. You're hot off of it. Any other maybe interesting surprises or nuggets or takeaways you think may fascinate or perhaps surprise our audience, sir?
No, I mean, I'm more of the blocking tackling guy. That I get the pleasure of speaking on those panels, but most of my things are I'm trying to work on getting new strikes out there. Limit the number of strikes that are offered, because too many of them look exactly the same and they clog up your retail stream and cost too much money for all the market makers out there to really quote all this stuff. So, given all that, I'm really stuck in the weeds and those things and mitigating the errors in the marketplace. So, I love talking about the big picture stuff, but just you don't get to do it enough. And so I get so excited talking about the retail guys. They had me all fired up. I was real bullish walking out of it.
Sounds like it. I'm not used to this effervescent version of you, Paul. Sounds like you were pretty jazzed.
It does. I don't really recognize myself either.
You're just full of optimism for 2021. I like it. But you mentioned one of your ongoing concerns out there, which is, of course, strike mitigation. Not the sexiest of things, doesn't get talked about a lot, but anyone who's been out there and trading their one lots in the options market these days, let alone the pros who are trading much more size, will recognize there's quite a few strikes out there in most of these names, and most of them don't have real, if any, open interest on them. And the markets are, shall we say, a wee bit wide. So I know it's been an effort of yours for a while, Paul, to try to improve the strike mitigation process. Give us an update on that. How is all that unfolding, sir?
NASDAQ Exchange filed a rule to start limiting the strikes in just a small swath of the, as we would call it, the options board. And it's going to continue to grow, and assuming that this works and gets through the proper committees at the SEC and gets passed, to start implementing really just a rationalization of them. Some places we don't have enough strikes. Some places there are stock movements that don't get strikes quick enough and don't have anything really to trade when the stock has made a move. There are ways to make that happen a little quicker and a little more dynamically, and there's also a way to get rid of stuff. My irritation is always, the 2.5 point strike, 2.5 point strikes in a $2,000 or $3,000 stock like Amazon. There's no difference between the 2000s and the 2002 and a halves. There's the Greeks are the same. The exposure is the same. We don't need to have that much out there, because as a market maker, you're forced, or you're forcing yourself through competition to make markets in all these things that are never ever going to trade unless you make a mistake. And therefore, the markets are kind of lousy in some of these areas. And so to get rid of a bunch of those strikes means that every time you send out a blanket of quotes as a market maker, you're sending out some fraction of what it would be today. And I think that the customer experience ends up exactly the same. And as them being able to, as the customer trying to find a place to express their what risk they decide to take on, versus today where there's always, it's just noise, and it's almost too many options. That pun not intended. Too many options for them to trade, and they get paralysis by analysis. That happens to a lot of people. I do the same thing. When I go on Amazon looking for some printer cartridges, and there's 75 different printer cartridges that match the description that I need. I don't know which one I want, man. I'll walk into a store and check.
I like it. I like this new optimistic Paul Giganti. You get me excited for the year that is to be 2021. Unfortunately, Paul, that music means we come to the end of our little sojourn here on Options Insider Radio. Before we go, if perhaps there's something you forgot to mention that you think would intrigue our audience, or perhaps given this new hopeful bent you got going over there, maybe you want to leave our audience with a little bit of a hint, a little bit of a tease of what they can look forward to from you folks over there at IMC in 2021. Now is the time, sir. The floor is yours.
Tighter, deeper markets every day. That's all we're working for at IMC. Hopefully we'll continue to do a good job of growing our business to benefit everyone in the food chain. So, hey, it's Mark, pleasure as always talking to you, and thanks for having me on. I look forward to doing it again soon sometime.
I like it. Tighter, deeper markets in 2021, more retail volume, more volume in general. From your mouth to the market's ears there, Paul. I want to thank you for joining us, shedding this little ray of euphemistic and perhaps bullish and optimistic outlook here on 2021. I also want to thank all of you out there for joining us here on Interview Tuesday. Remember, we'll be back tomorrow, Education Wednesday, double dose of shows hitting you. Options Bootcamp, OPR Thursday, of course. Second episode of the Option Block, as well as This Week in Futures Options Friday, Volatility Views. Then it kicks off again next week through Monday and into Tuesday with another Interview Tuesday, another episode of Options Insider Radio.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.